How did Britain recover from the South Sea bubble financial loss? Imagine waking up one day to find your entire savings wiped out overnight. That's what happened during the South Sea bubble crisis in Britain. It was a time when stock prices soared, then suddenly crashed, causing chaos. But how did Britain bounce back from such a huge financial disaster? Let's find out. The story begins with the South Sea Company, a business that was given the right to trade in Spanish America and took on a lot of Britain's national debt. People got caught up in the hype and bought shares, pushing prices sky high. By 1720, the stock was worth many times more than its real value, fueled by speculation and manipulation. When the bubble burst, many investors lost everything, and the economy took a hit. To recover, the government took several important steps. First, they held a parliamentary inquiry to investigate what went wrong. This investigation revealed widespread fraud and corruption among the company's leaders. Many of these leaders were punished, and their assets were confiscated. This helped calm the public and showed that the government was taking action. Next, Britain focused on managing its national debt. The South Sea Company had been meant to convert short-term debt into long-term bonds. Even after the crash, the government kept this plan going, which lowered the interest rates on its debt. This made borrowing cheaper and helped fund future wars and projects without causing more financial strain. The government also worked to restore trust in the markets. By punishing wrongdoers and passing reforms, they reassured investors that the market could be regulated. This led to lower interest rates for borrowing, giving Britain a financial edge over other countries. In 1720, Parliament passed the Bubble Act, which limited the creation of new joint stock companies without royal approval. Although it didn't stop bubbles from forming, it was an early effort to control risky financial practices. Looking at the long-term effects, Britain's ability to keep debt manageable and lower borrowing costs helped it stay resilient. Even after the crash, the country could still fund military campaigns and grow economically. So, Britain recovered from the South Sea bubble through a mix of legal actions, smarter debt management, and some early rules for financial markets. This episode shows how governments can respond to financial crises and rebuild confidence, even after a major economic disruption.